Hey, welcome to the show. It's July 12th, Monday morning, Simply Des Moines 15-minute market update. My name's Les Solgrove. This is the weekly look at what's happening in the Des Moines real estate market. Let's jump right in here this week and see kind of what's been going on here. So our top story this week, hey, we hit a new high. Yeah, that's right. Okay, come on, kids. We hit a new high this past week, a milestone. We hit 8,000 sales closed year to date. That's a good another milestone. You can see we're well ahead of where we were in 2020. Almost, we're almost 2 or 3, at least a month ahead, hitting that. So if this pace continues, and all indications are that we should be on track, we should hit around 17,000, maybe 17,500 closed sales in 2021. So just hard to say, but we're going to kind of keep an eye on that this year. So the week in review, let's jump right into this as well. Our new listings added, we added 244 homes to the market, still a few less than we did the same time last year. We're starting to see some more price reductions again, even though this was behind last year. We had 133 homes had price drops on them. I think that's just a product of the market maybe slowing down just a little bit from our peak. Accepted offers were down again as well, just a little bit. However, remember, we just came off of the 4th of July holiday. Last Monday was technically a holiday for a lot of people. So, we're going to kind of give it a break here and give them a pass. Maybe this next week, if we're still down a little bit in accepted offers, then we'll kind of say maybe we're still kind of on, we've hit our peak here. One interesting note here is that our back on the market is dropped a little bit. We're only at 18%, which is kind of where we typically are with the homes that maybe sell and then come back on the market, about 18% this past week. And it's a good sign that we're kind of back in the norm there. Again, there's our 8257 year-to-date close. So even already today, this is as of yesterday on Sunday, we're already 257 homes sold closer to the $9,000 milestone. So expect that to happen here in the next couple of weeks as well. So open house traffic was back. This is kind of interesting. Look here in the lower left-hand side there, you got resale homes, 134, new construction, only 117. Now, don't get hung up on the percentages below that. That just is from last week, and with last week being the 4th of July, everything was kind of screwy. But guys, only 117 homes were held open this past weekend that were classified as new construction, and 134. I think this is one of the first times I remember where we've seen resale properties kind of outpacing new construction on open houses. So our open houses kind of making a comeback. We'll just kind of watch that and see. But 251 homes were held open this past weekend. So we also have the home show going as well. So, there we go. Never mind. I just thought of that as we're live here on the show. I just realized new construction's probably down this past weekend because the home show's going. So a lot of the builders are focusing on the home show. There we go. All right. Well, we'll watch that this week and next week and see if the following week after that it comes back. So also in our week in review, this is the weekly homes added to the market, and this is quarter one. So I'm going to take a little trip back in time here. This is January, February, and March. And you kind of notice here we had only 2 weeks in the first quarter did we list more homes than the previous week compared to the previous week of 2020. And, January and the first week and week 4, we actually were the only 2 weeks in quarter one. We really underperformed on bringing on new homes into the market, new listings into the market in quarter one quite a bit. And that's where we kind of set the stage where inventory kind of dove for the first quarter and second quarter. Looking at the second quarter, so weeks 14 through 26, we did better. We had 5 weeks during this period where we actually did outpace the same week period from 2020, but still not enough to catch up inventory. Even as we got closer to the end of June, of course, we had the week 26 kind of bubbled into July just a little bit with the 4th of July there. But, we started to see a little bit of buildup during weeks 23, 24, and even 25 was still up, even though, it beat last year. But here we are. This is the next quarter here, quarter 3. We started off this past week. We had thunder, we had hail, we had tornadoes, we had rain. Boy, did we have rain. And it was also, again, we kind of had a holiday day there. So we're giving this week a pass. We'll look at week 28 and see if maybe, the count of homes do increase, because we have been seeing inventory rise just a little bit. We're going to look at that here in just a minute. So next week, we won't look at all 3 of these again. We'll just kind of pick up here quarter 3 and see how things are moving on. So this week's spotlight, I alluded to this last week. I can't wait. Sweet corn stands have begun to appear on corners. I know it has nothing to do with real estate, but good Lord, I love a good corn on the cob and all the things that come along with summertime. So welcome to summer 2021. It's back. So sale pendings. The spotlight this week, we just kind of look at a little bit overview of the 2 or 3 different categories here. We got sale pending counts. The yellow graphic in the background is 2021 pendings. The gold in the front is 2020 pendings. And you can see that last year at this time, we were still rising. We were still rising here in inventory, going under contract up until about this time last year. So I like this graphic because it really kind of shows you that this week, which is the week after the 4th of July last year, was when our market kind of peaked. And we actually peaked officially back in mid to late May of this year. So we, just, again, it's just a different market we're in. Is this caused by people finally getting out from COVID quarantine? Who knows? So we'll kind of watch that. Another category we'll kind of look at this week here is our different categories. This is single family inventory. We'll look at condo townhome in a minute, but just what this one represents is new construction homes on the market from about February 1st. I have it starting in February through just yesterday, July 10th or 11th through July 11th. And you can see that the crossover happened. Our resale inventory actually crossed over and started to outpace new construction inventory right around that first part of June. And each week we have been building resale inventory until we kind of came close to the 1st of July, and then things kind of started to go back downward. It's not slowing down. Believe me, there's no slowdown going on in the market. But I think what we saw was we started to see a good buildup of resale properties in the single family category, and people started to go, oh my gosh, it's just like the corn stands. The homes are out there. Let's get out and buy them. Inventory of new construction makes sense that it is also down, only because was kind of like the only thing that a lot of people were able to buy moving from April, May into June. You can see in April there that new construction was able to add more inventory, and then it just kept selling. So when we see inventory kind of going down or up here, it just means that that's just that segment of the market. New construction is just they're running out of I don't want to say running out. They still have 800, almost 900 homes for sale. But at the height here in February, they had over 1,200 homes for sale. And so let's see what this same graphic looks like for condo townhomes. Again, the red is new construction. The blue is the resale properties. You'll notice we are not seeing that crossover. We still are seeing similar patterns here. So right here, this is where, again, just like the new construction single family, the builders were able to bring on some new construction condo townhomes into the marketplace. And at that point in time, you can see they were on a pretty good downhill slide of selling a lot of that. So it was a smart move there, and they've done a good job of continuing to sell that. resale condo townhomes has really just kind of bubbled along, around that 125 to we're sitting right now about 150 condo townhome resales. I will tell you that the demand for those condo townhome resales are high. They're the tiny but mighty of the categories here. If you've got a condo townhome that it's a resale, especially if it's priced in that, under $200,000 price point, and it's a townhome. I know those are really few and far between, but really those are really, really, really popular right now. So the other category, and we'll finish up tonight or today, is kind of revisiting the automated valuation model data. And if you recall, it was about a month ago, I think, I did a kind of a focus on a spotlight on AVMs over time. And I thought this was kind of a good one to revisit, only because if you look over here to the far right, you can see this peak. And so to kind of give you an idea now, this AVM graphic here is based on a typical Des Moines 2-story home. It happens to be my home. I mean, I'm so typical. I've got a 4-bedroom 2-story with a 2-car garage in an established neighborhood. It's not old. It's not brand new. But I've been tracking my property AVM values since well before 2016. But this graphic kind of takes you from 2016 through year-to-date 2021, and you can just see that naturally over time, home values were kind of on a normal rise. 2018, we had a pretty good jump that year, and it's kind of reflecting what we've kind of seen as far as percentage-wise in 2021 here. 2019 was a little bit slower, and we had this drop-off. Of course, 2020 was COVID year, and even though we saw a lot of properties rise, we weren't seeing that multiple offers with over list price so much like we were seeing this year in 2021. We still had a lot of business last year, even during COVID, but we weren't seeing these crazy multiple offers. $10,000, $20,000, $30,000 over list price. So let's kind of focus in on this last year, 2020 to date here. And this kind of just shows you here, there was that buildup in 2020 and then 2021. And you'll notice here that about around that first part of June again, maybe mid-May, when the real estate market itself, the pendings kind of tailed off, we also started to see at least the AVM value of my property here on Thornton kind of do the same thing. So it's kind of reassuring that the numbers I'm looking at are kind of matching up. My home at one point, overall, this is an average of all the different AVMs. We'll look at that at the last slide here, which is looking at Zillow and CoreLogic and Market, CMA, RPR. The overall value showed that my home has had a pretty good swing this year, around that 255 mark early on, up to as high as about 290. So, again, that's kind of what we're seeing this year, but we are starting to see things kind of drop down just a little bit. So let's take one last slide here. This is breaking down those AVMs. Again, the blue line is the average. That's one we've been kind of looking at all along here. But Zillow is red, and you can see that Zillow has been underperforming or underestimating for the most part until we get through the springtime of 2021, at which point now it's kind of on the upper end. RPR, which is Realtors Property Resource, that one is also been kind of middle of the line until right now it's the top value. So they're the ones that are most, I guess, optimistic or bullish, would be maybe the term, of what values are doing. CoreLogic, which is probably one of the more reliable AVM services out there. A lot of mortgage companies, I think I've always said, are using that. They've been maybe a little more conservative. The spring market came on, and they're actually the lowest valuation right now on my property. And then, of course, my market analysis, which is the black dotted line here. and I update that once a month. So this was kind of choppy as far as that goes. But you can see that my market analysis shows I'm around 275, and that's in agreement with the average. It's also kind of close, a little bit lower than Zillow or RPR, and much, much better than CoreLogic. So I honestly believe, had I put my home on the market sometime in April or May this year, I probably would have gotten close to that 300, maybe a little above, which just, it's crazy. But that's, I didn't take advantage of that because I was like a lot of people, where do I go? So I just kind of decided to stay put this year at least. But anyway, just interesting stuff here. That's the AVMs. So next week, we'll finish up the show today. I'm going to try to answer a question. I'm going to talk to a lot of people this week if I can, and see what other realtors are kind of feeling out there, as far as, do they think that we're kind of in a slowdown, a dip in business, or have we truly peaked? Does this mean that, the month of July, are we going to still be on vacation? And then, of course, Iowa State Fair kicks off the 1st of August there for 10 days. What's going to happen there? Will we see a return to an uptick in sale pendings, and maybe have a second peak this year? I'm kind of thinking we might, honestly. I think we'll kind of see some different stuff. So, all right, gang, that's it this week. Please subscribe to my YouTube channel. The URL is at the bottom down there, youtube.com, or just search Les Solgrove, Simply Des Moines on YouTube. You'll find me there. The advantage to that is you will typically get the YouTube video before it's published on Monday mornings. And also you get notified of that. So if you like what you see, also please hit the little like button or the thumbs up, because that certainly helps me out as well. I do appreciate you. Hear kind words all the time from everybody. So again, thank you for joining me this week, and we'll see you next week. Talk to you soon.